Okay, quick look through Friday's end of day closing screens. It's a while since I've shared one of these public, but get there in the end. So I'm just going to buzz through the screens. This is available for watching on catch up as well. Just share the link, save the link, sorry, and you'll be able to watch it on catch up. I'm not going to pad it out too much tonight. I did a lot today in the chat. I run these every day. I do morning radars if there's anything interesting to look at, and I do them in this format. And so there's quite a lot of content. Pretty good week in small caps. Gold stock's doing okay this week. A little bit of bumpy ride, but a pretty good week in both my portfolios. So I'm just going to buzz through what I do every day. Turn up, turn over the stones. First things first, it's a little bit overkill, but you know, I do this as well. Just have a look at the markets, intraday markets. Yep, you know, we've got basically all US markets agreeing here. Up at highs again, up near highs. I'll just buzz through these. Transport's leader. It's had a pretty good move, you know. Wouldn't be surprised to see the market sort of take a breather, but you know, let's just say what we see. Dow Jones has, well, it's basically at all-time highs, isn't it? Closing high by the look of it. S&P all-time highs. Nasdaq, you know, it's been on the back foot a bit, hasn't it? But it's trying to sort of regain a little bit more of its all-time high territory. Russell, I mean, look at that. You know, what was, what is. As we always say, risk is flowing. You know, money is flowing into down the risk fountain into the more risky end of the market. DAX, when the transports and the DAX move together, I take notice. We usually get a very good market. We're in a very good market by the looks of it. Famous last words. Don't quote me on that. FTSE 100. Basically all-time high still, isn't it there? 250. As we move down the risk fountain, 250. I think we're not far off all-time highs now on the 250, are we? Not too far off. Small caps, fully listed small caps. Let's just put a line in the sand in here. If I can do that. Fully listed small caps just closed an all-time high. Where are we reading that anywhere else? You know, no, we have to turn up every day and just have a look and go, yeah, amazing, hey? You know, who'd have thought it? Let's go down into the AIM market. You know, obviously this market never goes up, it just swings up and down. But yeah, you know, first 52-week high in over 4 years. First pullback from that high. Very normal area. We talked about the 10-month or the 200-day. And where are we now? Big base would be fine. Whatever it wants to do. You know, our job is to go and look for the best, technically best stocks with the best growth. So, with that in mind, I mean, let's just jump to the currencies. I can't help but say this. I think I said it yesterday, so I've got deja vu. 30% off highs. Still the best long-term buy and hold in the history of long-term buy and hold investing. The coiners absolutely smashed it, didn't they? TLT just going sideways. It's holding the lows so far, so that's a good sign. Let's quickly have a look at the 10-year. Let's just have a look at cable as well. So a little bit of dollar strength at the moment, which is, you know, puts the shivers through the metals a bit, doesn't it? But nothing too much this week. Moving on from there, I'll just quickly jump into some commodities. You know, my gold chart's broken in ShareScope, so could do with them fixing that. But has this one got today's in? It has actually. Now the market's closed. So this is this one doesn't work intraday. Yeah, I mean, it is what it is, isn't it? Do you want to pick a top in that? You know, I'd rather have a blow-off move to start even thinking about picking tops. Silver really did play catch-up with gold because it's been so far behind gold for so many decades or whatever. It you know, it really is trying to catch up with gold. But yeah, it's just right up at highs. Obviously twitchy. Everyone called a top in it on this day here, didn't they? Take your brain out. You know, market's gonna get a little bit twitchy after a big move sometimes. So moving on from there, let me juggle some screens at my side. I'm just going to buzz through the screens. What gaps up today? Pro gaps. Let me have a quick look through these. Simple, every day. Moving on. Closing highs. Pick your time frame. All must pass. Obviously, you know, I'll just do a back to basics here. I did one on X today actually. If this stock's rising, it's got to break out. It's got to do it. We get a pro gap. Bang, there it goes. First pullback, quite a volatile one. This is the area where longer term holders, longer term investors, position traders, this is the area where you want to be looking at, you know. The low risk area, the high is the low risk buy. There you go, I just made that up. Something else I always say, you know, if there is no high, new high, there is no pullback to buy, meaning, you know, only buying up pullbacks in uptrends, not buying pullbacks in downtrends. So you can see how that works out. You know, buying pullbacks in downtrends, you're a hero for a few weeks, and then you know, there's no need to do that. You know, there's no need to fight these things. It doesn't matter where you look. You go back in history. The zone of interest around the base at the beginning of the trend should be the focus of anyone who's trying to capture a bigger move, especially. So I'll just zoom Rolls-Royce out as well for those investors of this kind of stock, you know, the big blue chip. It's all there to see, isn't it? What does it look like in the heat of the battle? Like it can look something like this, you know. You can be looking at something. That's where you've got to do business. So everything I look for in these screens, I'm looking for bases. I'll just do this. I'm looking for price action in this area of the screen, or at least breaking out into this area of the screen. That means it's in an uptrend for my time period, and I want to see a base. I want to see a consolidation. Tight ranges can only expand. Go in both directions, but you know, we're looking for this. This is what we're looking for. That's what they look like when you have to buy them. So, with that in mind, I can fly through these charts, and I can see the ones what are old news. I tend to, you know, these are, we're loaded with investment trusts tonight, so I'll just fly through all these. I'm also looking for the sectors I like to do business in. Different sectors have different sort of different footprint. Construction on the whole tends to be a bit choppy, but certain stocks, ones what are sort of more inefficient and orderly and smaller cap, to be honest, tend, you know, with higher growth, they can, you know, that's what you to for a boring sector. Electricity is another one. Electronics is another one. Sorry, for a boring sector to look interesting, it's going to have a reason, you know, and it will have a reason for the price action to sort itself out. I mean, you know, I've got skin in the game with this one. Traded choppy forever and a day, and then it started to sort itself out. For a FTSE 100 stock as well, that one was. So VLX, yeah, absolutely cursing my own idea, but you know, this doesn't tick everything I like to see. You know, I'd rather be in a stock sub £2, to be honest. But I've got some firepower to sort of expose to the market, and this is, you know, this base here. I actually bought the pullback to this base because it, you know, it basically exploded through the level, didn't it? Yeah, you know, I've kind of got the crystal ball out there, as you can see. It might just do a higher high and break out, and there could be an early pullback, even if the trend, you know, even if it works out, it might just leave the station. The trouble with only trading pullbacks is you miss all the strongest stocks. So by trading breakouts, you guarantee you catch all the strongest ones. Sometimes they explode out of the area, and I just implement the William O'Neill 5% rule, and then I'll start basically trailing, waiting for a swing point. That, you know, that's more in depth, but I'll wait for a swing point within that sort of 5% zone, or I'll just buy it, you know, and yeah, let it play out. So yeah, skin in the game. I know where I'm wrong. I know I'm going to be wrong around half the time. APN as well, you know, nobody in the right mind would be thinking about buying this stock here, but here and here, and this pullback here were the ones. These two were our best entries, really. Moving on. I'm looking for fresh ideas, though. I'm not looking for. And most of the time, there's not much to see, you know. But you've got to remember, if you find an idea every night, that's 250 ideas a year, you know, and there just isn't going to be 250 quality ideas a year, is there? They're gonna clump together a bit. You're not going to be able to take them all. You know, like all the metal stocks, there was a first wave of them what went, and then there was, you know, the second wave, what we thought were laggards and turned out to just do as well as the first wave. But you can't take them all. You can't take, if you get a good idea every day, you know, you just can't possibly take that many trades. So my criteria is pretty strict. I run these screens a lot and don't see anything worth doing. I should be in the best stocks I can find, or at least most of them, you know. GATC, so this one popped on a bit of a I wouldn't say tip, but you know, it got a bit of coverage, didn't it? It's been interesting to our group, hasn't it? Let's just have a quick look at it. GATC, so firing on most of its cylinders. the only downside for me on this one is that the the growth isn't really fueled by turnover, is it? You can see that it's pretty lethargic, but it's a micro cap medium float stock. It's a lower price stock, so it will have beta if it wants to trend, and we'll see if this news. Sorry, I'm thinking of a different one now. I was thinking of the other one what upgraded. Anyway, all the same, doesn't mean it can't trend. I'm going to tick as many boxes as I can. But that's an interesting one. Where was it interesting? On the breakout, on the pullback, and then, yes, it did break higher here. For those who were in it, hopefully it just keeps going. Moving on. 1 second, let me just juggle a screen here. So this one is light on its forward numbers. What did it gap up on? Revenue at least 132. So it basically turnover is forecast down still on this stock. The market's kind of looking forward, saying, well, once it gets that one out of the way, but that's what you're looking at, It's flat, isn't it? Flat rather than down. Stocks can trend for many reasons. There's no trend there yet to see, but it's not what I'm looking for myself, because I'm a growth investor. Reckitt, on the other hand, for a large cap, did pass my screen, but I'm a swing trader of these more liquid stocks, and this was an absolutely textbook swing for my style. Moving on. ACG, so this one's expected to post growth, so it's going to be quite harshly judged by the GTRS. It's actually forecasting earnings breakout, just because I'll kind of show you on ShareScope now. It's expected to post growth basically and post pre-tax profit. The market looks forward. Obviously, it's a more risky one. Why would I not take this perfectly good base here? Because I'm loaded in precious metal stocks, what are absolutely knocking it out of the park. The likes of PAF, and I know it's had a really strong run. I'd never be a buyer here, but I thought it was pretty late to the move in this one, but I'm still up. What we up? 150% more from a late buy, because I was in other gold stocks. One of them got bought out, so how many gold stocks can you literally own? Not enough last year, really. But yeah, the perfect storm. Low fuel, high gold. They're going all at it to just get as much out of the ground as they can, aren't they? While everything is in the favour. JLP, very, very early base on this one. Let's go and relive one of our best trades of 2020. And SRB, along with PAF, SRB. Let's zoom it out. REITs, software, so just buzz through these pullback screens, swing point screens quickly as well. As always, if anyone's got anything they want to look at, shout it out. I'll hit the end of day dash after this as well and have a quick look. But it's been a pretty good week. This one just picks stocks what are turning up. There is I've got a screen for the old legacy share scope, but the new share scope can't screen for this. I do have different ways of doing it though. Another return to growth expected to post pre-tax profit. Well, return to pre-tax profit. So turnover's a little bit light on this one year on year though. Moving on. Yeah, I think this was the one what upgraded a bit as well, wasn't it? Let's fly through the rest of these. Games Workshop. Yeah, perfectly good pullback swing point there on Games Workshop. Reverse fall base, expect a pullback. Again, why is this not a focus stock for me? Because it's a high-priced, efficient trading stock these days. It's still quite orderly, isn't it? But you know, this was the prime time to get involved for the re-rate. You know, the real aggressive move. I'm not sure how much growth it's got at the moment. They always tend to throw a beat out though, don't they? But you know, at the moment it's just pedestrian flat basically, isn't it? So not what I trade, you know. It was once, but KIST expected to post. I'm pretty sure we've got history with this one as well. Yeah, it went on a nice IP. I don't think I ever traded it. It rolled over, you know. Nobody should be holding this after this day here. Not if you're a position trader. But yeah, down it went. That's the usual, even from a late exit, say 70% of your money. You know, you got to remember how long you have to sit through this. 2 years of being in a big hole, 3 years up to in a big hole. It's not good for your psychology. Do you know what's good for your psychology? Selling when it breaks trend and not having to look at this on your portfolio. Just taking your profit, get to move into the next one. Moving on. Swiftly moving on. ANP. So I'm talking my own book here. So, you know, I get a feeling there's going to be a report on this one, looking at today's action and a few of the block trades. And I think I had a look when it reported last year, and it was here. So yeah, potentially gap risk ahead. We always say if it's into it, there's always gap risk ahead, isn't there? You just don't know which way they're going to gap. But I've got skin in the game on this. I haven't strangled it because this was quite a tight bracket, as you can see. 12% is an extremely tight bracket. So it needs the room because you can see it does this. And this is one I got knocked out in the past. I got knocked out of this one in the past, somewhere over here, just trailing my heat out of the market. Might have been right on the lows, who knows? But yeah, it jumped out of my lane. It's like you know, you're riding your bike up a hill and it jumps out of gear, and you know, my lane's orderly trend, and this one jumped out of my lane, and it's trying to get back into orderly trend again, and that's a nice little base we see there. So yeah, there you go. Want to sort of trend surf with your eyes maybe and see how it plays out, but that is a perfectly good entry. But you've got to account for the gap risk. It's, you know, are you going for a trend, or are you going, you know, don't try and short-term trade illiquid growth stocks. It's, you know, there's a lot easier stock to do that on. Give them the room if you want to go in for a big trend and position size. Forget percents. Think of you know, risk to stop on the portfolio, position size for it. So yeah, that's, you know, APN, interesting one. I see that swing point on Gore. Should we throw that in the watch list? Let me just do a control watch list for that one. Not for me though. Not for, you know, I'll even with my swing trades, I still prefer to trade growth stocks. Oh, one more screen I'll run. It's just my end of day. I'll just drag this over. We'll have a quick look because I filter for these every day. AMP there. It's actually coming up as a range long 10-day high. UU trading 6-month closing highs. VLX trading 6-month closing highs. DPLM all got gas in the tank, these stocks. 6-month highs. And let's just quickly have a look at those last two. Just jump SKL Skillcast. Not much for me to see there. And Berg. Choppy trading stock, this one. Not really one I look at. Why is there nothing for me to look at here on SKL Skill Group? Because I want something to key off. You know, I suppose that the most base-like thing I can find there is that, you know, a tight consolidation position is basically showing position building by bigger players. So when you see a base, and you know, and always look at the volume footprint. You know, go. I mean, you can see it here, can't you? This little base here, you can see the volume on the monthly is huge, and but it just, you know, yeah, this is not just this is an art as well as a science. You know, there's a nice base here, you know, and I want to see a tightening base, preferably a tightening base. I want to see the volume I like. I want it to have the growth I like. I want everything to come together. And this some stocks just, you know, go off on this trending illiquid trending run and don't let you in. You know, they don't offer a tight range. Consolidation is a stock having a rest, you know. So if you see a stock having a rest, I mean, I know everyone likes to say, oh, this is topping action. You know, stocks have to rest on the journey, you know, and then they'll start to make the next move. It might break out, pull back in, do whatever. I'll just jump to another stock and try and show you that, you know, the footprint of a, you know, they go on a trending run, then they have to have a rest. You don't know how long the trending run's going to be. You know, if you're in for the long term, you've got to sit through these things. Breaks out again, goes on a trending run, and you know, I've actually pointed to all the big pullbacks in this stock as well, because you know these are all 20% pullbacks or about. So yeah, you know, you see this action, it breaks out again, and then it builds another little base, tight range. See how it gets tighter and tighter, and then it expands. Tight range, bang, expands. So tight ranges can only expand. They can go in both directions though. You know, tight range could go in this direction, but the trend on your side is the best free lunch you've got in the markets. So that's the end of week screens. It's been a pretty steady week for us. Lots of green. There's a few phantom closers out there, but I think CNC had a complete phantom close. It didn't close there. It's just a bad print on the close. But even with these bad prints in the mix, it's been a pretty good up week for us. So have a fantastic weekend, everybody. And hopefully you don't get snowed in. Cheers all.